The first paradox is simple. The market that looks chaotic behaves with a stricter order than most traders do. Gann called it the law of vibration, the idea that every active stock, future, or index moves to a private rhythm, a measurable pulse in time. He did not chase prediction, he pursued confirmation. Time governs price. The crowd treats time as background noise. The professional treats it as the master clock. Perhaps you feel the quiet ache of FOMO, the compulsion to trade every wiggle, the boredom that turns into overtrading. Gann's medicine was mechanical. Build a swing chart, observe the overbalance of correction, note the secondary test after an advance, and wait for price to cross an old level in the correct time window. When the vibration aligns, time, price, and volume in confluence act. Otherwise, stand still. Rule: no confirmation, no position. This is not mysticism, it is measurement. Cycles repeat across scales. Minute swings inside weekly seasons, seasonal turns echoing anniversary dates. The engine is harmonic. Trends exhaust, ranges compress, tests appear on lower volume. The market speaks in patterns of effort and result. Your task is to translate vibration into rules. Define your windows, mark your levels, measure your risk. A second paradox: boredom pays. The accumulation phase rewards patience, not prediction. Discipline means you agree to be late and right rather than early and wrong. The law is moral as well as technical. Do what is orderly. Ignore what is merely emotional. If you seek the pulse beneath price, stay a moment. We will anchor authority to practice. How a law becomes a checklist. How a pulse becomes a trade. But before we enter methods, we must settle one question. If waiting is the edge, what exactly are we waiting for? The next window opens where impatience closes. Law without form invites impulse. Gann answered with a master clock. The market moves not as noise but as vibration time, setting the cadence, price tracing the waveform. To work inside this law, we accept a paradox. Prediction shrinks, confirmation grows. We stop asking where price will go and start asking when a move reaches harmony. The enemy is impatience disguised as analysis, the urge to act before the cycle completes its measure. Professionals observe the season, the crowd chases the day. Begin with the frame. Cycles, not headlines. Map dominant swings, then mark temporal windows weekly, monthly, and anniversary counts from prior extremes. Price is permitted to fluctuate. Time is not permitted to be ignored. Draw your swing chart with definite rules. A swing changes only when it crosses the last significant level. Measure each reaction's depth. When a correction exceeds the overbalance of previous reactions, trend energy weakens. Volume then plays the role of a secondary test. Strength proves itself on declines by refusing to expand. Weakness reveals itself on rallies that cannot attract commitment. Angles give structure to movement. A 1x1, the lawful pace, translates time and price into a single slope. When price respects the angle through tests and narrow ranges, vibration is orderly. When price accelerates far above it, exhaustion approaches. When it falls below, distribution progresses. Confluence is the gatekeeper. Time window, angle respect, and overbalance alignment must agree. One signal is a suggestion. 3 are a decision. Operate mechanically. Define your risk beneath the last confirmed swing. Add only on secondary tests that hold within the window. Reduce when the angle is broken with volume. The psychological effect is quiet certainty, the sense of working with the clock, not against it. Yet one test remains. What confirms the time window itself? We answer that in cycles. Paradoxically, the crowd believes momentum creates truth. Yet under Gann's eye, truth often appears in stillness, the quiet vibration before expansion. The market's hidden pulse is orderly. The disorder is our reaction. In accumulation, professionals prefer boredom. In distribution, they prefer exhaustion. The principle is simple: harmony versus noise. When price vibrates within a narrowing range, when time clusters near prior anniversaries, when tests occur on lighter volume, the master clock is aligning while the crowd grows impatient. The enemy is not the chart. It is the compulsion to act without confirmation. FOMO translates the smallest uptick into prophecy and misreads every feint as destiny. Gann's law responds with mechanics. Use a swing chart to define structure. Measure overbalance. If the latest correction exceeds the size and time of prior pullbacks, the trend's vibration has shifted. Mark zones where price crossed old levels and then returned. Wait for a secondary test on contracted volume. In accumulation, look for low-volume retests of support within a time window that echoes a prior swing's duration. In distribution, the mirror appears at resistance. Operationally, require confluence, time window, level, and behavior. 1 signal is opinion, 3 is law. Enter only after the test holds and price reclaims the last minor swing, not before. Risk is geometry. Place stops beyond the level that defined the test, and reduce size when cycles broaden. Mastery feels like measured indifference. You observe, you confirm, you align. Action follows the rule, not the impulse. The crowd trades to feel. The professional waits to know. If the secret is to wait, what exactly are we waiting for? The candle, the clock, or the confluence? We will dissect the confirmation itself, but one test still remains, and it hides in time, not price, waiting for the inattentive to declare certainty, late to act. Application begins with a paradox. The safest trade often starts after the move is already visible. Prediction flatters the ego. Confirmation protects the capital. We anchor to a simple discipline. Measure the vibration across price, time, and volume, and act only when confluence appears. The enemy is always the same impatience disguised as insight, the early click before the market shows its secondary test. So we reduce discretion to an orderly engine of checks. First, define the zone. Map the last decisive pivot and the angle that has contained price. Note the prior overbalance, the largest correction in the opposite direction. A real change of state will overbalance that correction in time or price, then retest it with less energy. Second, wait for the crossing of an old level within a time window. A close that clears prior resistance means little unless it holds for a measured count 2 to 3 bars within the window, while volume neither explodes nor vanishes. Consistency confirms, excess deceives. Third, demand the secondary test. After the break, price should return to the breakout zone on reduced volume and narrower spread. Buyers or sellers must show that the engine runs with less fuel. Fourth, align the swing chart. One swing up does not make a trend. A sequence of higher swing highs and higher swing lows, or the mirror sequence down, reveals the new rhythm. Fifth, control the risk with geometry, not hope. Place the stop beyond the secondary test and the containing angle. If that line breaks, the premise breaks. Execute small, scale only after the market pays. Mastery feels quiet. You observe ranges narrowing, time windows opening, and the crowd exhausting itself on the first surge. Then you act, one rule at a time. But one test still remains, the calendar confirmation that time, not price, leads. Discipline is the final vibration, the steady tone that remains when prediction is stripped away. We began with a paradox: time dominates price, and we arrive at a simpler law: confirmation overrules opinion. The professional mind accepts boredom as the cost of alignment. The enemy is unchanged: impatience, the wish to trade the noise between rhythms. We replace it with measured procedure. Operate by the clock, not the crowd. Wait for confluence, a time window tied to a prior swing's anniversary, a harmonic angle retaken, and an overbalance that ends. Mark the secondary test. Observe volume contract as price revisits a level. When price then crosses the old level in the direction of the larger trend and the swing chart turns, action is permitted. 1 entry, not 3. Rule-based, not hopeful. Risk is geometry made moral. Place the stop beyond the secondary test where the hypothesis fails. Position size is a function of distance to truth, not desire for gain. Trail only when structure confirms. Higher swing lows in accumulation, lower swing highs in distribution. Exit into exhaustion or disharmony. Wide bars on climax, or broken angle and time window missed. Do not negotiate with signals. Confirm them. Feel the change. Boredom dissolves into quiet confidence. The market remains uncertain, yet your actions become definite, mechanical, orderly. You read pulses instead of headlines. You align with seasons, not minutes. The creed is short. Observe, test, confirm, act small, protect first. Let time do the heavy lifting. If the secret is to wait, We wait for three things: time, level, and test to ring in one tone. When they do, we engage. When they do not, we study. The next path is refinement, cycle recognition, confirmation design, and risk as a living boundary. In this way, patience becomes profit taken in the currency of certainty applied. At the end of this study, the market looks quieter not because it changed, but because your lens did. The law of vibration is not a prediction engine. It is a master clock that brings order to what the crowd reads as noise. Its creed is simple. Time governs intent. Levels reveal character. Confirmation protects capital. You wait for the season or anniversary window that matches the prior impulse. You let price approach an old level, and you observe the secondary test. If the retest occurs, on narrowing range, with reduced urgency, and fails to cross the old level with authority, the vibration is losing force. If instead the market crosses an old level and holds above it through an orderly pullback, the vibration has changed state. One law: time first, price second, then volume never in reverse. Another law: overbalance defines control. Larger counterswings warn that the prior trend's engine has stalled. A third law: trade only after confirmation. Prediction is illusion. Confirmation is discipline. Operationally, align your swing chart to the dominant cycle. Mark the confluence windows, and commit only when the secondary test completes. Risk is mechanical. Beneath the last confirmed swing for longs, above it for shorts, 1 unit per pattern. Reduce size when time and price lack confluence. The psychological resolution is boredom embraced. You observe, you measure, you let exhaustion finish its work. This detachment turns patience into an asset and emotion into a signal to step back. Keep a daily ledger of tests and windows. Your edge compounds through recorded certainty. The final bridge is modest. Angles translate vibration into structure, and structure refines timing. If the secret is to wait, the next study is clear. Map the angles, measure the anniversaries, and let confirmation, not hope, open each trade.